Back. Home Depot out with quarterly results this morning, beating on revenue, missing on earnings, and reaffirming, importantly, its full-year guidance. Also taking a different tone on tariffs than Walmart, saying it doesn't plan to increase prices. Joining us now is D.A. Davidson Managing Director Michael Baker. Curious what you make, Michael, of the strategy to publicly come out and say that it is not going to increase prices because of tariffs. First of all, how hard is that for Home Depot and its competitors to do, and why do you think they said it?
Yeah, it's a little bit more of a conservative approach relative to getting in the crosshairs with the administration, I think. I don't really think the different strategies are that different from each other. Home Depot is going to use a portfolio approach. What that means is that there might be some areas where prices go up, other areas where prices don't go up or even come down, such that on balance, the basket of a project or of a consumer spending won't really change too much. Again, I don't think that's that different than Walmart, where Walmart said they will be aggressive in some areas to try to take some market share. I just think it's a different signaling and different posturing. And for whatever reason, Walmart was just a little bit more aggressive in their messaging, I think trying to get the administration's attention. Home Depot just a little bit more conservative in how they're talking about it.
Well, I think the question for investors then is, do we expect margin pressure on Home Depot if they're going to have to eat more cost when it comes to the tariffs, not passing it on to the consumer? I think they said they source half of their stuff from overseas.
Yeah, and one of the positive messages from this morning, I think, is that Home Depot does have some offsets within their cost structure. Shrink has actually been very good for them, of all things. That's been an improvement 6 quarters in a row now. Supply chain costs are coming down as they're getting a little bit more efficient there because of leveraging past investments. So all those things enable them to absorb some of the tariff costs within their margin structure, but still show margins where they thought they'd be at the beginning of the year, which, to be fair, is down a little bit, but because of some of those mitigating factors that they have.
How do you think about the company as it's navigating through this period and what you're paying for it? I mean, revenue this year for Home Depot is virtually flat with 2022. And we've had inflation in the general economy up quite a bit since then. You know, net income, cash flow, anything you look at has kind of been steady state for 3 years. They've really slowed down the stock buyback, which used to be a big part of the story. So when you're paying, mid-20s multiple, why is that at this point?
Sure, it is a premium multiple. Now, remember, that buyback was slowed down because of the big acquisition that they made a year ago. But it is a premium multiple. I think that premium multiple really it looks forward to a housing recovery. To be fair, that recovery does keep getting pushed off a little bit. But, to me, it's positive that they've been about flat this year in an environment, the stock price that is, and their sales, in an environment that really has not been great for them. So I think what we're paying the premium for is doing okay in a tough environment. Eventually that environment gets better, and that's where we should see a lot of leverage.
So interestingly, the Home Depot CEO, the Walmart CEO, and the Target CEO went to meet with President Trump last month to talk about the impact of tariffs. Now we've seen sort of how they're coming out on earnings and talking about it. Tomorrow's Target. What do you expect there, and how much more pressure will Target be under now to say that we're not raising prices? Can they do that?
Yeah, again, it is tricky, and every CEO and every management team seems to be taking a little bit of a different tact. I would think that Target would be a little bit more conservative in their messaging. Target has not been doing as well as Walmart, certainly, both in terms of their sales trends and their stock price, and we think we'll see that again when they report tomorrow. In other words, negative comps, whereas Walmart has been taking share and comping positively. Walmart just seems to be in a little bit more of a position of strength where they can be, I think, a little bit more aggressive in their messaging. I would expect Target to play it a little bit closer to the vest. Target has been in the crosshairs with things like DEI and boycotts and other things, and I think the last thing that company needs right now is to show up on Truth Social or something along those lines.
Yeah, every company's